China is looking grim. One forecaster sees the unemployment rate almost tripling last year's number.
The youth unemployment rate could actually be as high as 46.5%.
Imagine waking up to find that millions of jobs have vanished overnight. This is the reality China is facing in 2024. What led to this catastrophic labor market disaster, and what does it mean for China and the global economy? China, the world's second-largest economy, has long been a powerhouse of manufacturing and labor. However, 2024 has brought unprecedented challenges to its labor market. Millions of jobs have been lost seemingly overnight, leading to economic turmoil and social unrest. This video explores the causes behind this disaster, its immediate impacts, and the broader implications for China and the global economy. Drawing on recent studies and reports, we aim to provide a comprehensive understanding of this labor market crisis. China's labor market has undergone significant transformations over the past few decades. From the rapid industrialization of the 1980s and 1990s to the rise of the tech sector in the 2000s, China's workforce has been a critical driver of its economic growth. However, this growth has not been without challenges. In recent years, China has faced issues such as an aging population, labor shortages in key industries, and increasing automation. Economic slowdown and policy shifts. The primary driver of the 2024 labor market disaster is the sharp economic slowdown China has experienced. According to a 2024 report by the International Monetary Fund, IMF, China's GDP growth has slowed to its lowest rate in decades, hovering around 2.5%. Several factors have contributed to this slowdown. The ongoing trade wars with the United States and other Western countries have significantly impacted China's export-driven economy. Tariffs and sanctions have reduced the competitiveness of Chinese goods, leading to a decline in exports. A 2024 study by the Peterson Institute for International Economics found that Chinese exports to the United States fell by 25% compared to the previous year, leading to massive layoffs in export-oriented industries. In response to the economic slowdown, the Chinese government has implemented several policy shifts. The transition from an investment-driven growth model to a consumption-driven one has led to reduced investments in infrastructure and heavy industries. Additionally, the government's crackdown on the real estate sector to curb speculation has resulted in a construction slowdown, leading to significant job losses in related industries. Technological disruption and automation. Another critical factor contributing to the labor market disaster is the rapid pace of technological disruption and automation. While technology has historically been a growth driver, in 2024, it has led to widespread job displacement in China. A 2024 report by McKinsey & Company highlights that automation has accelerated in China, particularly in manufacturing and service sectors. Robotics and artificial intelligence, AI, have replaced millions of low-skilled jobs, particularly in factories and warehouses. The report estimates that nearly 30% of manufacturing jobs have been automated, leading to millions of workers being displaced. The service sector, which has been a significant source of employment in recent years, is also experiencing the effects of automation. AI and machine learning technologies are replacing jobs in customer service, retail, and logistics. For example, automated customer service platforms and AI-driven logistics management systems have reduced the need for human labor, leading to job losses. The rapid adoption of technology has also highlighted a significant skill mismatch in the labor market. While there is a growing demand for high-skilled workers proficient in technology and data analysis, the majority of the displaced workers lack the necessary skills to transition into these new roles. A 2024 survey by the China Academy of Social Sciences, CASS, found that only 20% of the workforce possesses the skills required for high-tech jobs, exacerbating unemployment, structural and demographic challenges. China's labor market is also grappling with long-term structural and demographic challenges that have contributed to the job losses in 2024. China's aging population is a significant demographic challenge. The one-child policy, which was in place for several decades, has resulted in a shrinking working-age population. According to a 2024 report by the United Nations, the proportion of people aged 65 and above in China has reached 18%, putting pressure on the labor market and social security systems. The aging population has led to a decline in the labor force participation rate, exacerbating the labor market crisis. The demographic shift means there are fewer young workers entering the labor market to replace those retiring. This creates a labor shortage in key industries and increases the burden on the social security system as more resources are needed to support an aging population. The massive rural-urban migration that fueled China's economic growth in the past is now presenting challenges. Many rural migrants who moved to cities for better opportunities are now facing unemployment due to the economic slowdown and automation. The 2024 KS survey indicates that rural migrants are disproportionately affected by job losses, with unemployment rates among this group reaching 15%. These workers often have lower levels of education and fewer opportunities for upskilling, making it difficult for them to transition to new jobs. The lack of social safety nets and job security for migrant workers exacerbates their vulnerability during economic downturns. China's labor market is characterized by a significant proportion of informal employment, particularly in the gig economy. Workers in informal sectors often lack job security, social benefits, and labor rights protections. The economic slowdown has hit these workers hardest, with many losing their livelihoods overnight. The 2024 study by the China Labor Bulletin highlights the precarious nature of informal employment and calls for stronger labor protections and social safety nets. Impact on China. The loss of millions of jobs has profound implications for China, both economically and socially. Economic consequences. The sudden increase in unemployment has led to a decline in consumer spending, further exacerbating the economic slowdown. Businesses are facing reduced demand, leading to a vicious cycle of layoffs and decreased economic activity. The IMF report projects that China's unemployment rate could rise to 8%, the highest in recent history, if immediate measures are not taken. The job losses have also affected the housing market, as unemployed workers are unable to make mortgage payments or afford rent. This has led to an increase in foreclosures and a decline in property values, adding another layer of economic instability. Social unrest. The job losses have also led to social unrest and protests across the country. Workers are demanding government intervention, better job security, and social protections. The 2024 KS survey indicates that public dissatisfaction with the government's handling of the labor market crisis is at an all-time high. Protests and strikes have become more frequent, posing a challenge to social stability. The lack of effective communication and transparency from the government has further fueled public anger. People are calling for more accountability and immediate action to address the crisis. Policy responses and government measures. In response to the labor market disaster, the Chinese government has announced several measures aimed at mitigating the impact and reviving the economy. Global implications. The labor market disaster in China has significant implications for the global economy. Global supply chains. China is a crucial player in global supply chains, particularly in manufacturing. The job losses and economic slowdown have disrupted production and supply chains worldwide. The Peterson Institute study found that several multinational companies have reported delays and disruptions due to the labor market crisis in China. This has led to increased costs and uncertainties in global trade. The disruption of supply chains has affected industries such as electronics, automotive, and textiles. Companies are exploring alternative sourcing options and diversifying their supply chains to mitigate risks. Impact on global markets. The economic turmoil in China has also affected global financial markets. Investor confidence has been shaken, leading to volatility in stock markets. The IMF report warns that prolonged economic instability in China could have ripple effects on the global economy, potentially leading to a slowdown in global growth. The uncertainty in China's economy has led to fluctuations in commodity prices, impacting global markets for raw materials such as steel, copper, and oil. Geopolitical dynamics. The labor market disaster has geopolitical implications as well. China's internal challenges may impact its foreign policy and international relations. The country may adopt more protectionist measures to safeguard its economy, leading to increased trade tensions with other nations. Additionally, social unrest and economic instability could weaken China's global influence. The geopolitical landscape is shifting as countries reassess their economic dependencies and strategic alliances. The labor market crisis in China could lead to a reconfiguration of global power dynamics. The labor market disaster in China, with millions of jobs lost overnight, marks a significant turning point for the country and the global economy. The combination of economic slowdown, technological disruption, and structural challenges has created a perfect storm, leading to widespread unemployment and social unrest. As China grapples with these issues, the world watches closely, recognizing the far-reaching implications of this crisis. If you found this analysis of China's labor market disaster insightful, don't forget to subscribe to our channel and hit the notification bell to stay updated on future videos. Share your thoughts in the comments below. What do you think about the job losses in China? How do you believe this will impact the global economy?